Hello and good morning. I welcome you to the morning meeting today on Friday, the 5th of January 2018. This is Henslet speaking, exclusively presenting this format to you here for JFD Brokers. I'm or no, I am, yes, but we want to have a look at the markets and how things develop right now, right before the NFPs today. So in fact, very interesting developments, especially, by the way, in the DAX. So the DAX is behaving very, very strong, especially yesterday when the euro reacted very, very strongly on a very, very strong data set, which usually should have favored the US dollar. ADP data came in significantly above expectation, and usually with by the way, this is something we'll have a look at later on. But the thing is that here, current development is it's surprising to see that, because usually you expect the ADP data, if it comes out that strong, to push the US dollar higher, which it in fact did. When you look at, for example, dollar Japanese yen here, we're yesterday we pushed back towards, and today back above 113, and nevertheless the euro was capable of really performing really well yesterday, as did, by the way, gold, which is also surprising, since usually you expect gold to lose ground in case of the the ADP data coming in, respectively US dollar pushing higher here, since this favors pickups, let's say, in the US yields, and in fact US yields pushed higher, but, and this is the thing, the DAX, the euro and gold were not affected by that, so they were capable of withstanding the momentum here in the US dollar. They were capable of withstanding pressure coming here from the US dollar. And here in this environment, you usually expect then the euro to weigh more heavy on the DAX in this case, which didn't happen. In fact, the DAX was capable of keeping pushing on the upside, as you can see here from yesterday on. No, not from yesterday, Tuesday already, Tuesday in the afternoon, after we started quite weak into the year, and where we could definitely see that there is some negative correlation between the euro and the DAX. So remember, Tuesday in the morning, euro pushed towards 121 here, and in direction of the highs of 2017, which weighed on the DAX and which resulted in a push below 12,800 points. We stabilized into the evening. We stabilized also in the euro, not making it above 121, but starting to push lower, especially or mainly due to good data around the ISM sector here, or ISM manufacturing. And then the DAX took off and started to retest the region of 13,000 points, which was also something which was somehow, or could have been expected, a retest of this region after the market didn't make it through 12,800 points. And then you find a classic and strong resist here, and instead of seeing seller pressure coming into the market takes off from there, even though euro is again quite strong and pushing higher. So two things here. First of all, what we've seen yesterday is usually something which indicates euro strength, even though probably right now we have not so much potential here on the upside anymore, especially if the NFPs come out better than expected today. If this really happens, I think the chances are high that we could see another push lower to 120 and probably below that level and push towards 1940, 1950 here. Nevertheless, in the long term, we have a good chance that the euro will rather sooner or later clear 121. It's not just based on the fact here that the ECB is expected to probably come out more restrictive in their rhetoric in the upcoming months here and reducing their asset purchases and so on, but it's also based on something which I came across yesterday here, and which was published by Deutsche Bank. It's very interesting to see that US assets are considered to be extremely expensive right now. And so what they mean by that, it's very simple. They are just saying, and that's, I think it's fair to look at US assets that way. They think that they don't see buyers are aggressively seeing buyers coming into the market, especially those aiming for yields here and returns. Well, they probably don't find them in US assets since they've already seen quite elevated levels so far. So Dow Jones, for example, pushed above 25,000 if you look at US equities here. And with this in mind, Deutsche argues that they say, well, they think it's likely that there will be some kind of capital outflows of the US dollar and probably back into the Eurozone here. This is then one of the main drivers, could be one of the main drivers, which could push the Euro USD not just above 121, but towards 125 and also probably 130. We're not talking about an intraday move or so, no, but we're talking about a development which could take place in the upcoming months then. And on top of that, even if the US equity markets rather sooner or later probably see a corrective move, and even if volatility spikes up, it doesn't necessarily mean that the DAX will then aggressively push lower. So in fact, on Tuesday, things looked completely different than what I present to you right now. On Tuesday, we were wondering whether probably there will be a push here towards the 200 simple moving average, and a break below that level with potential down towards 12,000 points and probably even lower than that. Today, we're talking something completely different, since the reaction here, especially after the euro presented itself so strong yesterday, is showing that the DAX obviously doesn't want to push lower, but in fact wants to push higher, and is obviously probably about to test the region around the all-time highs here next week already. And with this chart in mind for the upcoming months, it could mean that if the US equity markets probably start a corrective move, and we have to remember that right now we are waiting for more than a year. We're waiting for a corrective move here of more than 3%. So the Dow Jones hasn't seen a 3% move since the election of Donald Trump. It's just pushing higher and higher and higher, and it's again at a very elevated level. Sentiments are showing extremes here, which are about to probably rather sooner or later result in corrective moves. Therefore, for example, look at the AAII sentiment here. It's very, very bullish. Usually that coincides with short-term pushes here on the downside. And with all this in mind, and looking at this chart, it means that probably US equities are about to see a corrective move rather sooner or later. And if they see such a move, European markets will correct too, I think. But I think in relation to the US equity markets, they are probably more likely to stabilize here. I think they're more likely to stabilize, and we don't see such a aggressive push on the downside then, based on what we see right now, and considering the DAX, which is here withstanding some pressure it should usually see from the strong euro. Now let's come back to the strong euro here, or current euro US dollar level. If NFP surprised on the upside today, as did the ADP data set yesterday, there's a good chance that Euro USD here probably accelerates towards and below 120, and a weaker euro is usually also positive for the DAX, which could mean that the combination of a strong labor market in the US in December plus a stronger US dollar, meaning Euro US dollar pushing towards probably below 120, could result in an even stronger move on the upside in the DAX here, which could push us then towards and above 13,330, 13,350 points here. And the thing is that some might say, hey, doesn't look this a little extended? Yes, definitely. Nevertheless, the thing is that right now you definitely don't want to be short this market, because the market is just showing where it wants to go here and where it's headed here, and it's clearly on the upside. It's not on the downside. Volatility, especially in the US markets, is still very low, and so right now the momentum here points to higher. To a higher DAX in this case here, and then to a potential test of the region around the all-time high around 13,500 points, then of a aggressive move here on the downside. Yeah, and so in fact that's it on the DAX. Here we have a picture of the gold price. By the way, I've prepared already something yesterday. I presented this. Probably it makes sense to flip through this here. So let's only look at the strong data set here, NFP data set. So I've prepared in fact 3 scenarios here, and they slightly differ. We are only talking about 150 to 180 instead of matching the consensus here of 190,000, so slightly below expectation. We expect, or we can expect also second scenario, numbers coming in around the consensus, so as expected. And we can expect a stronger reading here. And now what we want to do is we want to only focus here on the strong data set based on yesterday's ADP data, which suggests somehow or makes it more likely that the numbers will come up better than expected. And if they do, we can not only look at the Euro USD, which is hopefully, I want to say, because the overall picture is bullish Euro USD. Nevertheless, I want to see a retest of the region around 1940, 1950, probably 19, so probably slightly below that. And therefore, we definitely need stronger than expected NFPs and a strong US dollar in this case. And it's also interesting for gold, because for gold, it's, by the way, this is only short term what you can see here. So bearish doesn't mean that we are looking at the midterm picture. For example, for gold, I'm very positive, especially after yesterday. ADP came in better than expected, and look at what gold did. So gold was very, very strong at this data set. In fact, made new highs here and pushed towards 1,326. Right now, it's giving back some of these gains. Nevertheless, it extended the gains yesterday, and you don't expect that. If ADP data come in better than expected, usually expect yields to push up, which happened, and you expect gold to react bearish to this, and this is what didn't happen, and which shows strength in gold in general. And I myself, I'm very positive about gold here, and could imagine gold to push higher, probably rather sooner or later towards 1,360, probably above that 1,400 USD in the upcoming months. But nevertheless, from a risk reward perspective, I'd really appreciate a push down towards 1,300, even below that, 1,295, 1,290 US dollar here around these highs from November. And consider long engagements against this region in gold instead of buying gold right here. And to get to see such a move, we definitely need good NFPs today. Let's see if the gold price reacts as expected. Usually expect NFPs to be good and gold to push lower. If this does not happen, well, it underlines how strong gold currently in fact is. It's the same, by the way, for the Euro USD. And yeah, so in fact, that's it. That's it from my end. Nothing more to add. Let's just see if the NFPs come in better than expected. It's very interesting, in fact, for many markets. It's not just Euro USD and gold, but also the DAX, as already explained. So the NFP data set today is completely different from those we have seen in the last months, where it was kind of a non-event because it didn't change anything in terms of the expectation around the Fed and how they present themselves then in their meetings and in terms of further rate hikes. But today is different, mainly from a short-term perspective, but also from a midterm perspective. If you consider the fact that, for example, gold is a very attractive buy, I think, against 1,290, probably 1,280 US dollar per ounce for more term engagements, which are aiming for a push towards and above the highs from 2017 around 1,360. Yeah, and so that's it from my end. Have a nice weekend. Enjoy yourself. Take care. Talk again to you on Monday then on the 8th of January, already at 8:20 a.m. GMT with the DAX long or short, or at 10:30 a.m. GMT with a morning meeting. I definitely look forward to it. Yeah. Again, have a nice weekend. Talk to you on Monday. I look forward to it. See you and bye-bye.